Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is trapped in between two quite important structure levels. This zone, in fact, was already acting as previous resistance. Starting from here, it was the top of the range and is currently still the top of the range. And at the same time, we have the bottom of the range, which is currently at this level, which as well has already been tested in multiple occasions and respected as support. So at the moment, we have a market which is currently trapped in between these two levels. And until we will continue to see the market remaining in between these two levels, more horizontal price action could be expected. Now, what you would usually expect is to see first the test of the high of the range, then the test of the low of the range. That is usually how the market essentially alternates, as you can see. And the last test was actually of the high of the range. So the next logical step would be for the market to want to go and test what kind of liquidity there is at this area. So there is a good probability of seeing a bit more bearish price action for the market to actually reach the bottom of this range. We can also notice, if we look closely, that there is structure exactly here. This is previous monthly support, which the market then broke to the downside. And at that point, that previous support was turned resistance here. So the market is also testing previous monthly support and resistance, from which there is the possibility of seeing some bearish price action being created. So the monthly time frame is quite clear. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, the situation is quite clear. We see a massive impulse to the downside, followed by a correction. Currently, the market is continuing lower. After an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And this shows us how we have the 0.32 Fibonacci lining up exactly here that the market is currently testing and rejecting to the downside. So from a weekly standpoint, it is quite clear how more bearish price action could be expected away from this area. Dropping down on the daily time frame, what do we see? Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. And by the way, I also spoke about USDCAD just a few days ago when the market was around this area. I explained all the reasons for which we could expect the break of this level, retest and rejection to the downside, which is in fact exactly what the market gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, at the moment, what we have, as I was saying, when we look at the commitment of traders, so what the non-commercials in the market are doing precisely on the CAD, is that with the last reports, net positions have been increased, which means that institutions are moving back to the bullish side for the CAD. Now, if institutions are longing the CAD, so moving to the bullish side for the CAD, they are actually shorting USDCAD because all currencies on the spot are traded against the USD. So if you're looking at the data for the CAD, you're actually already looking at CAD USD. So in order to have the information for USD CAD, you simply have to reverse everything, which means that institutions are currently shorting USD CAD by longing the CAD, so making it weaker. So let's keep this in mind that institutions also added, just with the last report, 3,800 longs and closed 3,700 shorts on the CAD. So essentially they shorted even more USD CAD and closed their longs on USD CAD with the last report. Let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description as well, so you never miss new updates. Now back to the analysis. What do we have here on the daily time frame? Now, from a technical perspective here on the daily, in creating this move to the upside, the market is currently starting to create this W formation. Now, in general, after the creation of a W, what you would expect is for the market to create a rejection to the downside to go and complete the pattern at the neckline, so at the previous resistance turn support. So here on the daily time frame, there is a good probability of seeing a potential rejection to the downside, at least for the market to complete this daily W formation. That is definitely a possibility. Considering that institutions are also shorting already USDCAD, and we see that also reflected. Institutions have been shorting and the price is already currently moving towards the lower level of the monthly range that we have identified at the beginning of the analysis. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, at that point, I wouldn't be surprised to see a potential rejection to the downside, completing this W formation at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.